Well, good evening, all. Ira Epstein, and here we are for Monday, December 22nd, just several days before Christmas. Remember, we're going to have abbreviated trading session coming in, and then you're closed for the Christmas day, and then we reopen and get things going again. So it's going to get very interesting trade, lighter volume, but that's not stopping the metals. Gold up another $33 tonight at 45.03. Silver, I'm surprised it's not up to the 70 level yet. And look at this platinum market. It just doesn't back off. Everyone that is short, as you keep making new highs, is underwater. And that's what you have to remember about this. So they're trading in a thin condition market, or thinner, because Christmas is a worldwide holiday, as we know, and that gets the markets reeling different. We're reading about how many people are traveling in America and how the markets are working with that. So you've got to remember, a lot of people are gone. They're going to be not looking at the markets during the day, and they come back and they go, what the heck is going on? Just fascinating time. Add to that tomorrow, as we get ready for the holiday, we get a lot of economic data. We get the monthly advanced durable goods at 7:30, along with the first look at the third quarter GDP numbers. Redbook weekly retail sales come out at 7:55. Federal Reserve's monthly industrial production and capacity utilization data. The Conference Board will come out at 9, and shortly after that, the Richmond Fed will come out with their monthly sector index for December, and that comes out Tuesday morning. We will get some, I believe we're going to get API numbers tomorrow as well. And NVIDIA today did receive permission to sell its H200 chip to China, but who knows if they want them. NVIDIA says they'll be ready to go with them and meet orders in February. We'll see. But as we come here, it's one thing that's very evident, all right? The markets are looking at the war scene the U.S. has got going on between what we're doing right off the coast of Venezuela. I hear good things are happening according to Ukraine and Europeans, that they're making headway on the talks as to how they're going to handle what's going to go on. Yet the war between Ukraine and Russia doesn't stop, and it's every day that there's more problems. On the energy markets, you know that you're rallying, and you know the reason why you've rallied, and it all has to do with Venezuela. It's not a demand-driven market right now. It's worry about supply, which I happen to think is somewhat unfounded. And the reason is those supplies could be made up in a number of places. For those of you that get my full research, I wrote about what Russia and how much it is discounting its oil. I'll give you an example. Their euros are going for about $27 under the base price of OPEC prices for oil afloat, $61. So they're taking terrible, terrible discounts in order to sell the market, but they need the income, Russia, and they're at the mercy of the one buyer. And if there's anything China knows how to do, China knows how to negotiate deals, and I'm sure they're enjoying what's going on. Venezuela's problems are that they're going to have to actually stop oil production in the country. They will run out of storage facility if they're not careful very, very quickly. So let's take a look, if we could, at the markets and what they are offering and go from there. In the gold, you're already up almost 2% for the week. So big rally. Take a look at how this chart has gone. It's been relentless to the upside, just keeps moving higher, higher lows, higher highs, the bell mark of what an uptrend is, higher, 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 all the way through. When we take a look at where it's going to, it's probably going to run into resistance at the upper Bollinger Band. It's gotten over it today. It backed off of it each time it got over it. So I can make an argument it's going to do that again. That doesn't mean it's going to peak out there, but I don't think it's just going to start blasting away from here and taking off, because you're already in what I call a fairly wide Bollinger Band stance. Be a lot different if this market had wound up with sideways action. It didn't do that. And you've embedded the market. So you've got reasons on pullbacks. A lot of traders will come in and say, let me into the market on a good break. Now you have to understand, as you get up to these new all-time highs, what happens is a normal reaction of 2%. Just to give you an example, You're dealing with a heck of a lot of money, and keep that in the back of your mind. As for the gold-silver ratio, it's down to the 65 level. Up here, you were pushing, if you'll recall, 104.6. So this market has lost a dramatic amount, $40. Well, actually 40 ounces of silver is the way to look at it, because these are how many ounces of silver you have to get to give 1 ounce of gold. In the silver, you went to the upper Bollinger Band. You've been embedded. Therefore, my analysis is until that gives break up, you're looking at traders coming in and trying to buy. And in my morning subscriber video, I do show you a way to do that each and every day if that's what you're interested in doing. In the copper market, you're overbought. So it's not as good a chart, just off the chart action, as the gold and the silver. And platinum's in a tear to the upside. You can see how it also has the embedded reading right through here. And it just keeps running at this band, backs off into it and runs. But this is exceptional strength on the upside. And notice where it came from. The real thinness, narrowness, if you want, of the Bollinger Band going sideways. That's where that type of power comes from. And that's why I say, as nice as the gold is, it didn't come off that type of base, and it's something you have to think about. The dollar continues its battle at the 100-day average. Now, it started a battle fighting, as you know, at the Bollinger Band and that number, and you had two moves under, and then since then it's almost been consistent. You pull back to that 100-day average and you're fighting your battles there. The swing line is up, the bias is down, and you're correcting an oversold condition. You'd have to get up and close over the 18-day average to get me convinced the market wants to go back to the upside. I'm not seeing that at all. So you put it all together, interesting time. And it's times like this that I tell traders, hey, turn your attention to learning. Because if you haven't made your money this year, I realize gold and metals are running, but you can also get into trouble. It's not the easiest trade after rallies like this. But there's a lot of signals on charts that you can learn from. The continuation pattern, or the end of a pattern continuation, it's both ways, comes when you learn to work with outside days, in my opinion. And, there are certain things that outside days do that you don't get with other patterns. I discuss them. I put together a series of videos for you to look at. I give examples of stocks, futures, and ETFs using them. And I walk you right through the way that I look at the market and how I use it. My course also comes with a free 2-week trial to my complete research. That's for ETFs and the futures markets. You just go to iraepstein.com. You'll see the course in the courses. You can also move your cursor up here. There'll be an icon you can click, or right over here. With that, I'm Ira Epstein. You have a good day. I'll see you in the other videos tonight. And of course, in the morning flash update. Take care.